Good morning, people. Good morning, traders. Hope you're all doing well today. It is January 31st, the last trading day of January, as we have seen a decent bit of slip to the downside yesterday, especially after hours when we saw that earnings report. We got a big plethora of news, I guess, to talk about in terms of those earnings reports, as well as what's going on with the FOMC today, because this is the second day of the FOMC meeting, right? The first Fed meeting of the year, and the latest monetary policy announcement from the Federal Open Market Committee will be released today at 2 p.m. Eastern time, something we're going to be trading with our live trading room this afternoon. And everyone's going to be watching this realistically if you're interested in how the market's trading, investing, right? I think it's going to be a very, very observed meeting, if you will. And we're going to be looking at the decision that influences mortgages rate steady between 525 bips to 550 bips, right? It's over 95% that we're going to see something of that caliber, just keeping things steady for the fourth straight meeting. And investors will be focused on tweaks to the language that Federal Reserve Chair Powell remarks in the post-decision press conference. So the FOMC jacked up rates to 525 bips in 2022 to 2023 to tame inflation, and the cost of borrowing money surged, constraining a range of economic activities like mortgages, mortgage originations, mergers and acquisitions, and stock and debt offering. Inflation has since closed in on the 2% level, now below the Fed's funds rate, while credit card delinquencies and net charge-offs have crept up, prompting expectations that the Fed will act while the labor market and consumer spending are still strong. So policy easing will be a popular topic of discussion at today's meeting, following some preliminary talk in December, and the markets have continued to embrace that kind of chatter with a focus on when the central bank will start a new cutting cycle. Now, remember, prior to this, there was a very, very high probability over the last few months that there was going to be the first rate cut that comes out in March itself. I think the peak was maybe somewhere around 70% that we do see the first rate cut in March. That has since dropped to about 35% that we see our first cut in March, meaning that we're most likely going to look to stay fairly stable until the May meeting, I think, which is the next plausible cutting period. So there's a lot of developments coming between now and March that could naturally alter the course that I was just talking about. Geopolitical tensions have been rising after Iran-backed groups killed 3 U.S. service members and injured dozens over the weekend. The Houthis in Yemen have meanwhile pledged to continue targeting ships in the Red Sea. Shipping delays worse than the pandemic might mean a resurgence in supply shocks that can halt the progress made on inflation. So, we can see generally looser conditions in 2024. We'll see how the Fed kind of responds to that. And looking at this, right, I think it's going to be a little stagnant on the pre-FOMC morning market session in terms of market movement and volatility. I think that it's going to be a little choppier, and people should be very aware of that. Trade small into it and mainly wait for the press conference. That's when a lot of the movement should happen into the end of the day, right? Something that we're going to be very, very focused on. So not only that, but we have big tech earnings that have continued this week and more to come today after the bell. I have Apple here on my screen, which was the leading big tech name to the downside. Yesterday, Microsoft, Google, and AMD all reported, right? Microsoft is creeping up almost to its prior day close. It had gapped down a little more viciously, but they're fairly unchanged, realistically, after yesterday's close. The behemoth reported Q2 earnings that topped expectations, aided by strong results from its Azure cloud businesses driven by new AI features. So we've moved from talking about AI to applying AI at scale, said CEO. And for the coming quarter, Microsoft expects overall revenue to be between $60 and $61 billion, largely in line with estimates, and the Azure revenue growth to be stable compared to Q2. So the results generally will enforce how Microsoft is holding on to the $3 trillion market cap, and you can see it's relatively unchanged. Now, Google, on the other hand, right? Google down drastically here after hours pre-market, whatever it is, down nearly at the peak, about 6% or so. Generally, the earnings were met with a much colder reception compared to Microsoft's, with some disappointment over advertising sales growth, and the Google parent firm also spent heavily on servers and data centers to power AI when its capital expenditures for the quarter totaling $11 billion. And that figure will only rise in 2024, said CFO on the earnings call. Meanwhile, investing group leader Jonathan Weber attributed negative market reaction to profit taking as well as sell the news phenomenon. So it just seems like forward guidance on Google wasn't all that it might have been. We also saw that AMD dropped a decent bit as well, pulling down some of the semis, while last week we saw some pretty good earnings results out of the big tech names. I believe the remainder of the week we have Apple, Amazon, Meta to close this week out in terms of earnings, and Nvidia I think somewhere in February, mid-February, something of the sort. Elon Musk, right, $55 billion pay package at Tesla has been rejected after a shareholder lawsuit claimed his hefty compensation plan was unduly approved, right, swept up by the rhetoric of all upside or perhaps straight-eyed by Musk's superstar appeal. The board never asked, was the plan even necessary for Tesla to retain Musk and achieve its goals? So you can see Tesla's gapping down yet again, just struggling to catch a bit, especially after all of this downside market pressure that we've seen in the other equities. So today's going to be a pretty interesting day all in all, the way that I foresee these things kind of shaping up. We have a lot of movement here pre-market. We're closing in on areas to the downside on the S&P 500 futures. Yesterday, that 49.55 area, as we were watching, held extremely well for the resistance, selling off numerous times and sold into the close, actually closing around that 32 area. Very, very important, where a lot of market buyers were getting trapped on the long side. Now, we're about to open under 49.32, right? That's suggestive that there's some bear side momentum in this. We just tagged the naked POC from a few days ago and holding some of this bit. The way I see this is, if we don't go buy side at 49.24, 22 area, we're probably going to slip lower, and the next possible buy becomes around the 49.07, 10 area. So I'm leaning kind of sideways, but we've accepted into a distribution lower, so technically we should be looking to sell some of these rallies to hold some of that downside momentum and potentially target and clean up the auctions that are much, much lower. So I'm going to start off the day looking for some of these sellers to come into the market. We're at the area where buyers need to appear if they're going to hold this, right? This is pretty much the last chance for the buy side to come in, hold this thing out, and continue this just rapid escalation back into highs on the S&P 500 futures. Now, we also have NASDAQ on the book. NASDAQ did very, very poorly into yesterday's close and the overnight session on the back of these big tech earnings. And tech has, NASDAQ, right, the index itself and tech has just been a lot weaker in general. We've accepted into a distribution block to the downside. And, excuse me, the way I see it is right now, this 17,470, 480 is a massive resistance area, but if sellers are going to come in on this, they're going to come in quickly off the bell around 420, 410, and my downside target on this is closer to that 17,270 area, right, before I could see any kind of buying come in. We'd be coming into two key supports on the S&P and NASDAQ where they've diverged yesterday. So I'm still looking for some of this downside, right? If we start crossing through those pivots that I was just talking about, a lot of this downside is technically void on the session. And again, like I said before, we have the FOMC that's coming out here after noon, 2 p.m. Eastern. We got the rate decision, and after 2:30 p.m. Eastern, if I'm not mistaken, we have the press conference. So a lot of volatility, movement, and expectation for movement is going to be held off into the afternoon in the overall market. So it's something that you have to understand, and it can get erratic. So with that being said, I'm going to open up our live trading room. We're going to take a glance at this, probably not trade much in this morning session, and leave it for the afternoon, see what kind of volatility comes into the market. And we're going to be trading that in our live room. So if you want to go check that out, check out TRADEPROacademy.com. I'll see you guys in there. Let's open up our live room. Happy trading, happy middle of the week, and happy January. January seems like it's lasted 99 million years. And we're coming to the end of January. Today's the last